Hello everyone and welcome to our latest episode of Market Bites. It is the 22nd of July in still a pretty hot and sweaty London. We're bang in the middle of another heat wave and it doesn't seem like it's going away anytime soon. So I suppose some people are enjoying that. Some people are hating it, much like the markets at the moment, which we will get into very shortly. But as always, I'm joined by our dream team, Neja and Brett. Neja, first of all, how are you?
Hi Sam, hi Brett. I'm doing well, but the baby got sick. We were at the pool for one day, and of course she had to drink all that urinated water, so she got sick, obviously. But she feels better now. And yeah, as you said, heat wave is here, so it feels lots like a summer.
It does. It does. I mean, in the UK, I mean, some of my friends are lucky enough to have already, sorted out air conditioning in their house. But I imagine we fast forward a few years, it's going to be a lot more popular. There's probably a bit of a trade out there, to be fair.
You know what? Sorry, I have to jump in here. I
Yeah.
was in London a couple of weeks ago and staying in two different hotels, and it was a heat wave, 35 degrees out there and no AC. And I had to look at the stats, like only 6% of UK households have AC. So I was so surprised about that. But
Wow.
apparently you didn't need it so like in the past years, but you need
Well,
it now.
we need it now. I'm surprised the hotel didn't have it, in fairness. But yeah, 6% households, it's nothing, is it?
Yeah.
So there's probably a trade out there. I know there's some issues with the energy costs and all of that, but maybe something to look into. And if anyone knows anything, do let us know, and we can focus on that in a bit more detail. Brett, as well, how are you? Probably in a hot America as well.
Doing good, yeah. Hot America. We've got the wildfire smoke too. So it's been a kind of a one-two punch of a apocalyptic feel. But no, it's going good. I guess you could also make some dynamics connections there with the market too. But
Yes, absolutely. I was just at a wedding in Sweden, and my friend lives in New Jersey, and he was getting updates from his wife about what you just mentioned there, and then there was floods in New York, and I think there was a
yeah.
point where they were a little bit worried about the World Cup final. And I
hmm
saw videos of, and there was an England player, some people listening to this will know, called Joe Hart, who played a few years ago, and he was, don't quite know why he was walking down New York barefoot, but he was, and his feet were like underwater. But the World Cup is over now, and we were just talking before we came on air. Of course, I was in Miami a couple of weekends ago for the England-Norway game, which was a fantastic experience. For anyone that's been Miami, you'll probably agree with me when I say it's just one of the most mental places out there. I couldn't quite work it out where I loved it or didn't love it, but I'm going to go with love it. And anyone who has been to the Blue Martini Club in Brickell, you will know that it's a pretty wild place. But I had a great time. England won that game, then lost the second one. So we're not going to talk about that anymore. But Neja, before we get into a little bit on earnings and we get into a little bit about the general market, you had a comment, or you saw something just from one of the banks just about the consumer and the World Cup and all of that.
Yeah, that's right. Even before the World Cup started, I think that we spoke on one of our episodes
Mm.
about how interesting it will be to see how strong consumer is based on World Cup attendance and how much they're spending in bars and so on. And yeah, I followed the stats a bit, and apparently World Cup host cities saw a major boost in restaurants, spending in restaurants, bars, and any like local retailers. So the spending numbers were actually strong. Like those places where the main venues at received a significant boost, like restaurant spending in host cities rose around 6% during this early tournament period, and this. I think that this demonstrates several positive things, that consumers still have this confidence and also the ability to spend when there is attractive reason to. Because honestly, I was quite surprised about this result, because I was most like I thought that we will see empty stadiums and not so many people attending, but apparently consumer is still quite strong, as we saw the full tribunes, like full venues of everyone cheering for their teams. But also on the other angle, yeah, it appeared like consumer is strong, but anyway, it is a once in a lifetime opportunity, and I think that many people are saving up for the opportunity like that to spend the money when they have their team in semifinals or so or anything like that. I think that we should be kind of careful with those numbers, because it is like a specific opportunity, specific event that occurs only once in every 4 years. But yeah, overall, I was surprised that it appeared as a strong event. But I will be waiting for more consumer-related data to actually prove that, and that we see also on other areas that consumer is still as strong as it appeared in the World Cup.
Yeah, I mean, the Miami bars got their money worth. I will tell you that for free. And I spoke to people from all different nationalities that have been out in America for like 3-4 weeks at a time, which is not cheap because you're basically hotels, flights, different venues. You mentioned all the stadiums were full or pretty much full, which meant it was a success. And we've always said on this podcast, you never bet against the US consumer. But also when you chuck in that World Cup, and of course a lot of these places would have made good money. But Brett, I guess in a way there's a story here based off the back of what Neja said about, this is, you've got to have a little asterisk next to this data and future retail sales numbers, because it is a one-off. And much
Sure.
like with earnings, if you have one bad quarter out of a year, it's not the full picture. So would you agree that, based off of that, but also linking it into earnings, you've always got to zoom out a little bit?
Totally. I mean, you get this like nice one-time bump, which is like great for the moment, right? The bars are busy, restaurants, hotels, people are getting jobs. You even saw the hiring number a couple months ago. The hospitality number was like the strongest piece of the jobs report, I think, to report the June report, maybe.
Yeah.
So, it's like you see that standout, but then, inevitably you don't get that comp, moving forward. So, it's a nice one-time bump. It's like a little bonus. And that's about it.
Yeah, I'm with you. Right, let's talk a little bit about earnings. I'm just going to name some of the companies that have either reported, about to report this week as well. So you've had on Monday AMC, a retail favourite from the COVID year, still obviously quite popular actually. Ryanair, Domino's. I'm guilty of having a Domino's way too often, actually. So I'm helping their share price along the way. You've got a few airlines in there: GM, 3M, Charles Schwab, and then AT&T. You've got Tesla, Alphabet, ServiceNow, IBM, Texas Instruments. Those 1, 2, 3, 5 companies I just mentioned are after the close tonight, and then you've got Nokia, Intel, American Airlines, Deckers, Newmont. Some big companies, Verizon, even on the Friday. So it feels like a pretty big week, and Neja, it's only going to get bigger as well, isn't it?
Yeah, it's gonna get bigger, but to be honest, my focus this week is on Alphabet, because like all this search, like I don't know, what do you like? When are you searching now? Are you using more like ChatGPT style of responses, or are you still using Google search? Because there's been a lot of discussion about Google search, this advantage narrowing with all these new models that we have out there.
I would say it's a mix, but what I would say is it's a lot less Google than I've ever done. And Brett, would same for you? Quick answer.
I guess, for me, it just depends on what I'm doing. Like if it's like work or more like intensive, then I would use like a ChatGPT or a Claude. But if I'm just like looking something up, or like looking, like if I'm shopping or trying to find something, I just go to Google. So it's for mine, I have like different use cases, I guess.
Yeah. I think so, and I think that with these earnings, Google is trying to improve their search and also adding AI features into it. So when
Yeah.
you search something, you get already generated response.
Sure.
Sometimes it's on point, sometimes it fails a bit. But anyway, I think that if they use all the stats and all the data they have about their users, about everyone who searches for shopping, for different videos, they have all this information about all of us. So I think that's still advantage they have, and they can use it to improve their search. So I'm looking forward to that, what they will have to say about it. And anyway, they delivered in the first quarter double-digit revenue growth. So I think it's gonna be like I hope, or like I'm looking forward to if they will be able to beat these earnings as well, because I think it will mean a lot for also for other AI and AI related companies out there, and for other Magnificent Seven, including like the ones that will be reporting next week.
Yeah, I mean, sorry, Brett, I'll come to you in a sec, and we've talked about this, and it feels like we talk about it every quarter, but we're now at the point where we've seen historically these capex numbers, and some of them are just insane. It is about proof now, isn't it?
Oh, totally. Yeah, I mean, there's so many like I want to say like dynamics, but like moving parts within this entire AI trade, even earnings season in general. But like sticking with AI for a second, it's like Alphabet was the like Mag 7 darling of the last 6 months last year, right? Like it dethroned everyone, even took out Nvidia. It's just been a monster, but it's been kind of underperforming lately, which admittedly is healthy. But we see this a lot with Mag 7, specifically this rotation trade within that group. Like a year ago, if we were sitting here a year ago filming this, it would have been Microsoft was the darling. It was at all-time highs. It was trading like 550. Now it's under $400. Like it's unloved. Will we start to see like a rotation within the group, or is that rotation now going out of Mag 7 and into the chip and semi play in general? That'll be sort of like one angle that I'm kind of keeping an eye on. The other one is what's the general reaction going to be like? What's the temperature going to be on these reports? Because you saw like ServiceNow will be a really, really interesting one. That name has really struggled. The business appears to be doing fine, but the sentiment is crushed, which is not unheard of in the software space right now. But you look at like IBM. I think they report this week too, but they pre-announced a week ago, and they had like the worst one-day performance in their history. They've been around for like the dawn of the stock market. IBM's existed just about, and they had their worst day ever. So, this is a market that's just punishing names that are failing to deliver on the bigger picture, and is I'd say reluctant to even reward the ones doing well as of now. We're only like 2 weeks into this season, but I'm going to be really like paying attention to the reactions here, not just the numbers.
I think that no name is safe from this earnings season, that no matter who you are, like based on the sentiment and what you will report, one word could change the narrative completely.
Yeah, I mean, there's a few little bits and pieces, certainly for the newer retail investors, that I think it's worthwhile keeping on, because you've seen already, but previous quarters where a company beats expectations but still falls. And that can be tricky for people to understand. And it can be for a multitude of reasons. I mean, one of them that I do encourage people to look at is how was the stock traded in the build up to the release? For example, and just
100%.
purely hypothetically speaking, if the stock has gone up, let's just call it 5 weeks in a row, or 20-30% in a short period, you can kind of say and kind of guess that we're expecting it to be an unbelievable earnings report. So if it just beats it, that's not actually what the market really expected, and therefore you get, buy the rumor, sell the facts. And I can remember when I was first investing, and you hear an earnings report and it beat. Okay, I'm going to buy, and then the next day you're down 6, 7, 8%. You're thinking, what on earth? And then of course on the other side, you've got when a company beats, but then the forward guidance just isn't necessarily what the market was expecting as well. So Neja, would you say, and it's it is stock specific and dependent, would you say forward guidance, what management think right now is more important than just whether a company beats or misses?
Oh yeah, definitely. I think
Yeah.
it's definitely more important, and of course, Capex.
Yes. Yes.
Yeah.
Absolutely.
I
Absolutely.
mean,
Well, go on.
Sam, just look at like I think like we talk endlessly about the chip stocks at this point, but like look at the way like technically Micron and Broadcom not really in this earnings period, but they
Yeah.
report so late in the season. It's almost like a preseason report when they come out. They came out in June.
Yeah.
Micron's numbers were fantastic. If you listen to that report, you would it was like the most optimistic feeling in the world, and yet the stock has not done well at all since it reported. Broadcom, ASML, Taiwan Semi, Samsung. I mean, all these names have reported blowout numbers, and they may not have fallen, but they've certainly not extended these rallies. You know, we're sort of seeing that, and even the banks haven't gone anywhere in a week. Record profits, record quarters. So,
Yeah.
I mean, we are seeing this kind of dynamic, and what a shift it's been since April, right? Since the last earnings season, because then we were just looking to hear like, hey, the world's not ending and we're still making money. And it was like this huge relief rally that went on for 2 months. Now the expectations are completely different than when they were 3 months ago.
Yeah, absolutely. You mentioned their Micron. They reported on June the 24th, and on that day, they finished up 15.7%. You'd be forgiven for thinking, fast forward a month, they're going to be much higher. And they haven't. They've had some bad days in the mix. I think they had a half decent day yesterday, but they've certainly, they're way off their all-time high. Yes, they had an incredible run up to that point as well. And you mentioned Broadcom there; they were down 12.5%, and they'll be reporting at the back end of this one as well. Just a quick look at some of those other dates of companies reporting. As mentioned, you've got Google, Tesla today, Amazon on the 30th, so next Thursday, to keep an eye on. I'm not actually sure if we've got Nvidia's date yet for you, but we'll keep an eye on that to see if that comes up. Microsoft on the 29th, so this time next week. Apple next Thursday as well, so Amazon and Apple on the same day. That's going to be a monster day to keep an eye on. And obviously, there's a lot to focus on there as well, and over the next couple of weeks we'll keep you all updated with that. But just a quick summary, just going off what we said, keep an eye on how the stock has traded into the release. Yes, focus on whether the company beats or misses, but that forward guidance, what does management think happen next, will be important. And those Capex numbers, and are we actually seeing results? Because there will be issues for companies where they've spent all of this money, they do believe it's going to have a massive impact, they just don't know when. And that obviously is uncertainty. And markets, if they hate one thing, it's uncertainty. Which kind of brings us on to our next topic, and that's oil, right? Because if we go back, and I'm going to bring up the chart, so just bear with me, but I'm pretty sure it was pretty much the beginning of July where it filled the gap. So we, end of February, beginning of March, we gapped higher when this whole geopolitical situation kicked off. And then we, pushed up, I'm looking here at crude oil. We pushed up to the 120s, had a go a couple of times to try and get above 110 in April before we then, fell what was a pretty big drop, by the way, 37% drop from sort of 29th of April to the beginning of June, where it traded crude oil $67. At its peak today, from the 2nd of July, we're up 31% in 20 days, and it's not 20 trading days as well. Are we worried about oil? I mean, if we look at the rate hikes, Brett, I think in 2 meetings time, it's now 68-70% chance of a hike. This is a little bit worrying now.
Yeah, I mean, not even just on the inflation front and interest rate front. I mean, just in the way that it hits. I mean, we've seen like when you listen to like Delta or United's call, the impact that fuel costs has on them, the price, the pain it has at the pump for everyone around the world. I know, like, in America, we like to complain when gas hits $5. I know for some of you that would be a blessing for it to be $5 a gallon. So perspective is pretty important in times like this. But yeah, I mean, kind of kidding aside here, it's a couple months ago it was the end of the world with oil approaching $100. Markets were in a panic. Right now, they almost seem to be ignoring it. And I don't know if it's because of the volatility that we see within it. You mentioned the almost 40% drawback. And that had that nice favorable impact on retail sales, because the gas station sales were down. The inflation numbers were more digestible, I guess you could say. People were finding the positives, and now in a month from now we're gonna have to go back through and try to find a silver lining here with oil up 25% on the month. It'll be tough, and that makes it hard for the Fed too. They're trying to play this guessing game of should we raise rates, should we not. It's hard when you have oil moving 20 or 30% in a 4-week stretch.
Yeah, it is. I mean, crazy move, really, to be completely honest. Neja, what are your sort of thoughts at the moment? Because by the way, right, if you're looking at the chart of just US equities and talk about whatever you want, I'm just going to say, really, since the 11th of May, it hasn't really done anything. It's just in a choppy range.
No, it doesn't. But here I'm mainly looking at three risks that are included in this price hike. That's consumers. That's the effect that it's gonna to have on consumer spending. Then higher inflation and also possibility of higher rates. I think that all of those three are related. And from my point of view, I think that in a range from $90 to $100 around, it will be manageable for developed economies, but still we will feel the pressure out there. And as you mentioned, there are sectors that are more impacted by higher fuel prices, and there will definitely be effect in those. And yes, consumer spending, there will be the most direct economic effect, because when petrol and energy bills rise, households has less disposable income, and that will again particularly affect those low income consumers because of food, housing, transport. All of that represent a larger proportion of their budgets. But when looking at equity markets, I think that sometimes we can see kind of slower consumer spending. It has a delayed effect on all of that. So I think that it will be represented sometimes, but not. There won't be an immediate effect on there, but I'm surprised how it is not such a huge news as it was in the beginning of the year. I think that we just got used to that volatility and all of those unpredictable events, and we got used to that basically.
I think you're right. Headline exhaustion. We talked about it, didn't we, probably a couple of months ago with anything, but this in particular, it does feel like that a little bit. It was funny watching the charts yesterday, probably about 24 hours ago. I was looking, oil up, FTSE up, NASDAQ up, S&P up, Bitcoin up, gold up, and I was like, hang on, what is happening here? I mean, obviously you can make an argument for each one. Gold, you could say, one, it sold off a lot, inflation worries, okay, maybe it's an opportunity to get back in. Equity markets, we had a good sort of rally in AI related stocks and tech stocks, and that dragged the market higher. FTSE, oil and gas companies make up a decent chunk of it. Okay, that can go higher too, but I'm be interested to see how we wrap up the week, how we finish the week, and how we are in 7 days time. But interesting that equity markets have been okay. I think for anyone that looks at the charts, technically 28,000 seems a very important number for the NASDAQ 100. We had support there from the 17th of July, but also the 10th of June. Below that, I think things can unravel. And actually, it's probably been quite tricky for short sellers out there of equity markets that have been looking at oil go higher over that 4-week period and less, and thinking this has got to go, this has got to break down. But dips have still been bought. Right. But I think when you zoom out, it is contained for now. We go back 3 weeks ago, we're not going to have a rate hike this year. We're now 3 weeks further to the present. Looks like we are. So things can change very quickly. And Brett, it goes back to your point that it's tough for the Fed, and the new man he's got a job to do, isn't he?
Yeah, I mean, and that I'm almost surprised that the market has handled a lot of this news so well. I mean, I do question at what point does oil how high does oil have to go before it starts to be taken as a serious risk? That's probably around 100 would be. So I always feel like that's the line in the sand. before we switch between like risk on and risk off. But the market just kind of glossed over the fact that the Fed has a new chairman, a very different communication style, and was pretty much like, in so many ways, they were hawkish by just saying, hey, like, inflation's a problem and we're going to fix it. Like, you generally are not fixing inflation by being in an accommodative, dovish position. So the market just sort of took that in stride, and that's not just like a semiconductor thing. I mean, you look at small caps have continued their march to new highs. They've done very, very well this year. It's resilient. It's impressive, but there's also the earnings growth to back it up. So, I think at the end of the day, it always does kind of come back to the fundamentals.
Yeah, and also just to wrap it up, by the way, even by the time this goes live, that could be a new comment that sends oil down 10%. And then we're, having a completely different conversation. And maybe the market thinks, and I've talked about this before in the Daily Voice, like it's almost like the can's been kicked down the road. We know, there's going to be some positive news around the corner geopolitically that sends oil price lower again. It's just a matter of time. But that said, like you were just saying there, Brett, crude oil gets to $100. It's a different story. The market needs to start really thinking about the impact. So wait and see is what I would say, which you can understand why some investors would be a little bit cautious right now. But just to wrap it up, keep an eye on oil, keep an eye on those big earnings we got coming out today and next Wednesday and Thursday, as they are really going to shape the rest of the summer, you would suggest. But anyway, Brett, Neja, thank you as always.
Thank you.
See you guys next week.